In this video, we try to cover what happens if you're too active in the market. More often than not, after we buy a stock and we monitor its price, we are tempted to book the profit if it rises a bit. We say to ourselves that since the stock is a fundamentally strong one, we can buy when the price falls again. This stock, though, may not fall to those levels again, and we regret having gotten out very early. This usually leads to very high turnover for very small profits and losing sight of the long term. Let us say you have a 50-50 chance of forecasting the price movement each time. Now you sell the stock anticipating it will fall in the near future. The probability is 50%. You repeat this activity once. Now the probability of 50% is again 50% multiplied, so your chances of success are 25%. You repeat it one more time, your chances come down to 12.5%. This means you are likely to lose long-term upside in the stock more than 85% of the cases. Furthermore, each transaction that you make comes at a cost of booking the profit. Let us say you make 5% profit each time on these transactions. Your profit will be less than 15% when accounting for all costs. Compare this 15% with the possible upside of 50% or 100% when held for the long term. Sometimes, even when you are content and ready to wait to let the story play out, stockbrokers or their dealers may tempt you. Let us take an example. Suresh, an investor, has been tracking Laurus Labs for a while. He has seen the latest quarterly results and the history of strong performance from the company. He also has been tracking prices since its results were declared on 1st of May 2020. He believed that there are so many occasions where he could have bought low and sold high, so he puts his analysis to test on June. For example, he buys the stock on 5th of June at 94 and subsequently sells it on 11th June at 99 for a cool profit of more than 5% in a very short period of time. Since Suresh is so active in the market, he constantly tracks the stock and cannot stop from buying again at 12th June at 96, which he subsequently sold again on 19th and sells the stock at 103 for more than 7% gain in again a short period of time. With this newfound confidence, Suresh again enters on 23rd June at 110 as he still believes Laurus to be a strong company. But since that time there is a small dip and he wants to protect himself with his stop loss and it is triggered at 105, resulting in a less than 5% loss. Overall, he is still profitable, so he keeps searching for the next entry point around 95 to 105 range. This is where his judgment bites the dust. Laurus Labs since that time has appreciated more than 230% and has since not seen the levels that Suresh was anticipating. Suresh did the hard job of identifying the right company based on its numbers and fundamentals, but could not contain himself from trying to predict the exact price movement on a daily basis. Purely due to his actions, Suresh had to forego so much of the upside. Another thing to note will be the fact that short-term capital gains are taxed at 15%, whereas long-term capital gains are taxed at 10%, thereby further incentivizing you to hold on to the stock for a longer period of time. Many times, price spurts happen when more people get interested in the stock, and you may not be able to buy back the stock after you book it for a small profit from your buy price. Further to that, you will also be hesitant to buy it back at a higher price since your mind refuses to let go of the latest sell price. It is very, very important to avoid being so active in the market. This is usually the time when you let emotions take the major chunk of your decision making and should always refrain from these sorts of activities. From this video and the example given to you, you will probably appreciate that too much of activity leads to missing out the majority of the upside on many occasions. Please stay away from having too much of activity. Once you identify a good company, hold on to it till the time it reaches the full potential of its price as per your expectations or as per your advisor's expectations. Hold on to it and then make more money. Thank you.